miners create new Bitcoin. Which seemingly is the case because miners create a new Bitcoin block, and with a Bitcoin block they get 50 new Bitcoin issued. So it seems like they are the ones creating this new money, but I would argue they're not. The people who define the set of rules issue the money, in my opinion.
Hello, ladies and gentlemen, and welcome to our interview with Max Hillebrand. Max is the CEO of ZKS Nax, and he is a contributor to Bitcoin, and he is operating at the forefront of monetary computer science in the realm of privacy-focused cryptocurrency wallets. So, Max, welcome to our Risk Management Show podcast today.
Yeah, thanks, Boris, for the invitation. I'm really looking forward to our conversation.
Absolutely, it's my pleasure. So, Max, I believe that we will have a very thoughtful conversation on the topic of ethical and economical aspects of Bitcoin. But before that, could you tell us a short story about yourself, your career path, and what brought you to where you are right now, and what you guys at ZKS Nax are up to these days?
Yeah, so my prime interest and past experience is in the economics realm. I was an early student of economic science and found my dedication and specialization in the Austrian School of Economics, praxeology, which is a fantastically logically sound way of thinking about the economic realm and problems that humans encounter in. That gave me especially a good insight in money and the monetary economics behind it. And the great importance of money as a technology to be functional and well designed. With gold, of course, being a beautiful monetary technology that has worked for millennia, but of course with some obvious drawbacks. Nowadays, we live in cyberspace. We really like to communicate online and do our business online. And obviously, gold cannot be transported online. Gold is in physical form, and therefore it has a great drawback in modern society, right, where we need to have digital money. So I was looking for alternatives or let's say new monetary systems that could exist, and thankfully discovered Bitcoin as a technology that since 2009 has very successfully established a new monetary unit in cyberspace. A digital good that is scarce. And that can be transacted from one person to another, without the trust on any third party, which is quite a phenomenal achievement in computer science, for numerous reasons. And so that absolutely fascinated me, and kickstarted somewhat of a second life with really being much more interested in technology and in software and cryptography, because I realized of the immense beautiful things that can be built with this. And so for the last many years now, I've been quite focused on discovering what it means to actually create a money in cyberspace, and what the important aspects of such an endeavor are. And it's been a wonderful journey.
Absolutely, yeah, good introduction. Yeah, I mean, we all know that gold exists, I think, since early ages of our civilization, and Bitcoin and crypto is only from 2009, about 15 years, right? And now still it's growing in popularity, and some people say that it is actually digital gold, although we don't have such a large database of how it performs. So people kind of have used to this very hard growing period and then a slump. And can you briefly explain for people who are not in this space what Bitcoin is and how it functions as a digital currency?
Yeah, so maybe let's go back through history, because Bitcoin is not the first digital currency, by far not. Probably the first endeavor to this was in 1983 with a technology of Chaumian blind signatures. David Chaum, an ancient cryptographer and cypherpunk, came up with this idea of making digital payments online. And it worked in quite an interesting way. You had a centralized server that is used to basically keep the record of the transactions that are happening, and to define what are the rules of this transactional system, and also to enforce it. right? Because as soon as we want to have a payment system, right, a money system, so to say, then we want to have certain there need to be certain aspects exhibited in the technology in order for it to be useful as a money. And because obviously, with money, when I have a gold coin and I give it to you, Boris, I shouldn't have it afterwards anymore, right? I gave it over to you, and that means I no longer control it. I no longer enjoy the use of it. I no longer can decide over what should be done with this coin because I hand it over to you. And in exchange, you give me a piece of steak or whatever we're exchanging here. And uh, in the internet and in the cyberspace, that doesn't really work, right? If I have a PDF document and I send it to you via email, I still have the same PDF document, right? I didn't give up my use and enjoyment of this data. We just copied it, and thanks to technology, we can copy information for basically nothing, right? The marginal cost of production for information nowadays is basically zero. The tiny amount of electricity and the tiny fraction of the cost for the hardware, but it's basically nothing. Um, and so that's great for information. We want to share information and build great things, but not so good for money. And so specifically that aspect of scarcity defined as, there's a conflict of ownership over who can control these scarce resources. And we need to have that with a money system as well. And so the early ways that we can do this is basically by a central third party being a authority defining on which what is the time basically, which transaction has been spent first. And if I have a digital coin and I send it to Boris and later I send it to Alice, and then which of these two transactions happened first? Which one is the valid one? The one to Alice or the one to Bob? And back in 1983 or the 1990s, when this technology was first rolled out, there was a single server or computer, a laptop basically, that kept the record of these coins and the transactions that spent the coins, and specifically of who's the first to spend a certain coin. And then, of course, this worked great. Chromium eCash works at the speed of light. It doesn't have any transaction costs, and it even has perfect privacy, right? Not even the service operator could find out which user is paying whom. So that made it very useful as a monetary system. But of course, the big problem is it's just one computer in the middle of this network, and if you plug the cord on this one computer, the digital coin is gone. It literally evaporates and cannot be used anymore. And of course, that's it's I guess it's okay. If eventually this podcast is no longer available in cyberspace and this message is forgotten, it's not that bad. But if your money is all of a sudden forgotten, the thing that you worked for very hard your entire life to give something to your children, if that all of a sudden is gone, that's a very different thing, right? So of course the destruction of the money has catastrophic consequences. And then for a very long time, the goal was to create a monetary system that does not rely on a single entity or person to keep up and running, because that's an incredibly huge burden. And such a burden and responsibility should not be in the hands of any single individual or company. And this should be something that is just more distributed, so to say. And Bitcoin is finally, after 30 years almost of research and development, a solution to this problem of a distributed record-keeping system for keeping track of the creation of new monetary units and the transfer of those monetary units. And of course, how this works is quite a elaborate scheme, but ultimately it's been a long time coming, and it's good that it's finally here.
Mm-hmm. All right. Okay. We will not go in details who invented it, and some people say that if kind of a person of this really will pop up, then it might affect value of Bitcoin. And but let's discuss economic impact. How has Bitcoin impacted the global economy since its inception? And because I know that since its inception, it was kind of like a joke. Some people bought pizzas even with 1 Bitcoin. Now they can buy. I think they can buy a few house in a small village. I think with 1 Bitcoin. And what are the potential future economic impact of Bitcoin and the economy around?
Yeah, I think the impact of Bitcoin has been well, indescribable, monumental. Right? The impact on economics as a science has been fantastic as well. I, I don't think we understood really economics before Bitcoin came around. It taught us so many new insights in what it means. But nevertheless, I think there's a lot of interesting things to learn about the history of how Bitcoin emerged, because also Satoshi Nakamoto, the definer of the original protocol, he just said, hey, this is a idea, a computer program where two or more computers can talk to each other to come to a consensus on who owns how much money. And one single person cannot control or change the system. And as long as the majority of the users are honest and stick to their rules, then the system works, and we will all tend to agree on what the current state of our money system. And the first response to this was, well, this is a ridiculous system. Everyone has to verify every money transaction of anyone else. That's ridiculous. First of all, that doesn't scale. That's not how you build scalable computer architecture, that everyone has to talk to everyone. It's ludicrous. And also, it's not private, right? Because why would someone on the other side of the planet have to verify the transactions that I'm making? Why does he need to know about my financial business, so to say? But that's unfortunately how Bitcoin works to some extent. And then so the first were naysayers, like this cannot work, and people who have experienced numerous attempts of creating digital currencies that all failed, right? With DigiCash being the first, and numerous attempts since then. So this was not the first time again that this was tried, and all previous attempts failed. So there was not much hope. But if at the very beginning, Satoshi Nakamoto was the only one who ran the software, and so only he was using the system, and everyone else literally ignored it, until eventually a couple weeks later or days later, Hal Finney joined, which was now the second person who said, "Hey, this is an interesting piece of software. I like this software. I like the rules of the monetary system that this code embodies, and I want to support it. Right? Therefore, I'm going to run the code on my own computer." Meaning, Hal Finney was the first one to voluntarily choose to adapt himself to the monetary set of rules that Bitcoin is. And this enabled him to receive Bitcoin. Right? So Satoshi Nakamoto sent a transaction of, I believe, 10 Bitcoin from Satoshi to Hal Finney a couple days after the launch of Bitcoin. And this was the first, the first creation or the first actual transfer of monetary units from one person to the other. And the cool thing here is both Satoshi and Hal Finney had a perfect agreement on what are the rules of this monetary system. Both of these people clearly said, this is the money that we both like, and I'm sending it to you, and now you have it. Right? So we had finally a consensus forming among two people of this newly created thing in cyberspace. We agree what it is, and we agree on that it is transferred. And then from then on out, more and more people joined. And first, started sending Bitcoin just as a gift. Is this something? Hey, look, here's this weird thing in cyberspace that you can now have, and now I no longer have it. Look how fun this is. And eventually people were like, okay, look, like this is interesting, and there's a limited amount of Bitcoin available, because part of the rule set of Bitcoin is that there's only going to be ever 21 million Bitcoin, right? And so we know exactly the total money supply in the future, right? And we know exactly the time distribution when this new money is being released, right? Every 10 minutes, every block, 50 new Bitcoin. And after every 4 years, this amount gets cut in half, 25, 12 and a half, and so on. Now we're at 3.25 Bitcoin every 10 minutes. And in another 4 years, it will be cut again. And so all of these rules were initiated right at the beginning of the protocol. And so people were saying, hey, like, now I want to have some of these Bitcoin because those are cool rules. And people started to say, to trade them. And yes, you can have those Bitcoin, but I want something in return. And initially those were US dollars, basically. You could send me some fiat currencies on my bank account, and I will give you the Bitcoin. And so this started happening quite soon. But then also, of course, a famous pizza transfer, right? So someone will say, I don't want to give you these Bitcoin for another currency. I actually want to give you these Bitcoin for a pizza. And I want to buy a pizza with Bitcoin. And so this offer was done in 2010, I believe, like a long time ago, right? Where someone online said, Yeah, cool. I'll buy you the pizza, like, or I'll get you the pizza. Just give me the Bitcoin. And so here we have the first somewhat indirect barter with Bitcoin. The pizza wasn't produced by the person who received the Bitcoin. The pizza was produced by Domino's, some fast food chain. But there was some middleman who accepted Bitcoin and was willing to deliver a product for it. So here we have the first economic transactions happening in Bitcoin, and then later people were starting to sell all types of things for Bitcoin. Famously alpaca socks. Someone online was producing socks with alpaca wool, and you could get it for I don't know a couple hundred or a couple thousands of Bitcoin, quite a lot. Um, and yeah, since then Bitcoin is used for all types of exchanges, both for services as well as for goods, physical and digital, and of course for gifts and inheritance, etc. Yeah, this and by now we have numerous companies, even for example, putting their balance sheet on Bitcoin, and really denominating contracts in Bitcoin. And this means that we have slowly but surely a new economic system manifesting. And the crazy thing is that we've never really seen a man-made monetary system being adopted voluntarily on the market, without any coercion of you have to use this, but simply with the offer of these are the rules, and if you like them, you can enforce these rules for yourself. And yeah, this consensus in digital money is a groundbreaking achievement to humanity.
Yeah. I think within this short-lived, not short-lived, but for this episode from 2009 till now, Bitcoin went through a lot of processes, and I think it went also a lot of scandals or money issues, like I think last year FTX exchange, and also it was some initial coin offering. Was a lot of scams involved in Bitcoin because there are some kind of people who are who were trying to play on this murky world because no many people knew what is it in play, and a lot of people just parted with their money for nothing in return. Can you explain this part of this kind of Bitcoin environment?
Yeah, absolutely. Like Satoshi gave us this beautiful idea of look, this is a way that we can establish the rules of a new monetary unit, and you can make up the rules, right? Like you can change a lot of different variables, and it will still work. And that Satoshi picked one specific set of parameters for his monetary system, so to say, that he started. But everyone soon realized that, well, this means I can create a new monetary system too. And I mean, why wouldn't I create a monetary system where, there's a billion coins and I have like half of them? That sounds actually like a really cool idea. And then I can, tell my friends, hey, you'll get some of those tokens as well if you give me some other money, right? And so very soon now we realize that, okay, like we have these scarce assets in cyberspace, and either I have them or you have them. But the way that these are created is very different, right? We have something like Bitcoin, which was the Bitcoins are not issued like for, in exchange for some money or something. Right? There's no transfer being made, no promise being made. Bitcoin is not a company, right? It's not a startup where you go to an angel investor and say, hey, I have this great idea, give me a lot of money, and I will hire developers to build it. Um, uh, However, a lot of other, shitcoins, so to say, did that. People defined rules that put them individually at a great benefit, and also make promises, based on those tokens. And here, then I think we saw that not just monetary units were created in cyberspace, but also security, right? Equities, stocks in companies, debt contract, right? A lot of interesting things that are not necessarily money, or at least don't seem to be traded or used by humans like money, but other financial contracts and such. Again, it's crazy that we can do these technologies now in cyberspace, but they're very different from money. And Bitcoin is a technology that seemingly is tailor made to be money, and whereas others are tailor made to be speculative companies, so to say. Um, so yeah, and as you mentioned, for example, FTX was an exchange. Basically, it was a bank, right? It was also a money warehouse. So you could deposit your Bitcoin or other cryptocurrencies with this exchange, and you got an IOU back, right? It's like I have a gold coin, and now I give you, Boris, the gold coin, and you give me back a piece of paper that says whoever has this piece of paper can get the gold coin back. And the piece of paper is not the gold coin, but it's as good as the gold coin, right? Because as long as Boris is honest and still liquid, he will still give me my gold back if I still have this paper. But of course, Boris isn't the money, right? He's not a money service provider. He's a bank. He's a custodian in this sense. And then the question is, how do you run a custodian? You can have a full reserve custodian, where I have 100 grams of gold in my vault, and I have 100 paper tickets outstanding. Um, there's a one-to-one pack. I'm fully liquid at any time. Anyone could come and demand, I want all of the 100 grams back, and I could deliver it instantly. So that's a full reserve bank, right? As we've seen in the past with gold numerous times, and the same exists with Bitcoin, for example. Numerous banks that claim that they have all of the Bitcoin back, but ultimately you cannot really verify. And then another alternative, which we've seen on the market, for thousands of years, is the aspect of lending. Basically, that I give you my gold coin, Boris, but not for you to put in a safe, but for you actually to go invest. Maybe some other entrepreneur needs a loan, or maybe some family wants to buy a house, or some equity investments potentially even. The bank can do this as well with the money that was deposited. And in such a case, the bank would usually pay a dividend or like an interest rate. And so we see this in classical fiat banking. We see this in modern cryptocurrency banking, where FTX was one of these. But banking is a very difficult business. It's not easy. There's a lot of risk involved, and there's a lot of trading risks involved, and therefore there's a lot of regulation and obvious best practices that ought to be followed in order to ensure that no money is lost. Specifically, no money of people who thought they have a full custody bank or a full reserve custodian, when in fact it was a speculative venture. So yes, unfortunately, businessmen do tend to make mistakes and lose people's money, and that's a big shame, and that happened. But ultimately, that's not the Bitcoin technology. Right? The Bitcoin technology is one that is designed such that nobody can steal from it. It's literally impossible.
So, looking ahead, what do you see as the most critical ethical and economic challenges that Bitcoin will need to address to achieve broader acceptance and integration in the mainstream financial system? We know that we already have a Bitcoin ETF. Some countries like El Salvador has Bitcoin as kind of the same nominal value as a dollar. No, not value, but kind of they can pay with a dollar. But is something we need to do more to have it adopted more widely in the society?
Yes, absolutely. There's a lot of things still to be done. And I guess the prime case is to reduce the cost of transacting and using Bitcoin. This is quite crucial, because anything that's expensive, of course, will not be used by a lot of people who cannot afford it. And there's always been a cost to moving base money, right? There's a cost to moving gold, or even just to holding it. If there is a high cost, people will find some substitutes, right? Because you need to buy the coffee around the corner. And if it's just too expensive, too cumbersome, too difficult to do that with gold, then you're going to use something else, like a custodian that protects your gold and gives you the pieces of paper that are much easier, much cheaper to transact with. And we've seen that in Bitcoin as well. Arguably, it's easy and especially cheaper to use custodian systems, and this is a way that currently increases the number of people who can use the Bitcoin system. And so custodians are an important part of this technology and will continue to be around, in my opinion at least. And that is so this technology has to be built out further. But then, of course, we would like people to use the Bitcoin system without relying on custodians necessarily, if possible. And so the cost for this has to be further decreased. And here, for example, we see phenomenal progress with, for example, the Lightning Network, which is a way to transact Bitcoin, but without having to tell everyone that this transaction is happening. Which again, this is the main bottleneck of why Bitcoin cannot scale, or where any blockchain systems has difficulties to scale, because everyone has to verify every transaction of everyone else. it's a ludicrous idea. Imagine your computer only works if it also computes everything that every other computer on this world computes. No, it's ridiculous. That's absolute nonsense, but that's how Bitcoin works. And so we need to find ways to use the Bitcoin system without the requirement that we need to tell other people about it. Otherwise, the system simply doesn't scale. And so the Lightning Network achieves this phenomenally. And there's further other technologies or variants of this technology that show very promising aspects. One, for example, is also a zero knowledge system. So zero knowledge verifiers and CK Starks, CK rollups, extremely promising technology, the cryptography that simply did not exist back in 2008 when Satoshi was thinking about Bitcoin. He used extremely basic cryptography, no elliptic curve digital signatures and hashing, SHA-256 hashing algorithm. That's basically it. Those are two extremely rudimentary cryptography systems, and still they can spawn something as beautiful as Bitcoin. But since in the last 15, 20 years, there were substantial advancements in cryptography that allow us to design systems, that reduce the cost and the friction, which is very important.
Mm-hmm. All right. So I would like to ask you a personal point of view. What is the major misconception? Of course, there are a lot of misconceptions in this field because it's so new and kind of controversial. But what is the major misconception in your eyes that you kind of strongly disagree with?
Well, there are many. Bitcoin is a very unintuitive technology, and even after years of thinking, I'm still not quite sure of how some nuances of it work. So yeah, numerous misconceptions. Where to start? I guess one common one is that miners create new Bitcoin. Which seemingly is the case because miners create a new Bitcoin block, and with a Bitcoin block, they get 50 new Bitcoin issued. So it seems like they are the ones creating this new money, but I would argue they're not. The people who define the set of rules issue the money, in my opinion. So basically, back when Satoshi was the first to run the software which defined and verified and enforced the set of rules, he basically created all 21 million Bitcoin right away, because that is the set of rules that is there, and the set of rules is absolute. It's atomic, right? Either the rules exist or they don't. So all 21 units of Bitcoin were issued right away. And what miners are doing basically is just to unlock them out throughout time. What miners are actually producing is basically a proof that time has passed, right? With proof of work for all intents and purposes. So this is basically what Bitcoin uses the proof of work algorithm for. If everyone could write any transaction, if anyone could write a bunch of transactions to the Bitcoin blockchain as fast as possible, then within a couple of days there would be terabytes of data to store, obviously. And Bitcoin is a system that anyone can anonymously write to. And that's a crazy idea for a database that has such an open access. So there needs to be some rate limiting for how fast can you write new messages to this database. And proof of work in form of Hashcash, another idea from the 90s, is very efficient for this. So it basically means that you can prove to a third party that you have expanded electricity in order to perform computation. And this is a proof that's very difficult to generate, but very easy to verify. And so the more proofs that you perform, the more another person can verify that time has passed. Because of the laws of thermodynamics, computation takes time. And therefore, the Bitcoin block generation is crucially limited by time. And that makes it a phenomenal system where, again, the users of the system, you as the merchant receiving the money, or you as the customer paying someone for the money, you are the one that defines the rules of the monetary system, including all of the 21 million Bitcoin. So in fact, you are the one creating all of this money.
So interesting. So because our audience is mostly risk managers and compliance officers working in the companies all over the world, what do you think is most important for them to know? Because maybe it's some banks are reluctant to work with digital currencies. Some banks want they want to work. And what do you think they should know about this and how to kind of make it more integrated in the mainstream financial system?
Yeah, Bitcoin is a tool. It's a technology, and it's software. It's a way of thinking, basically. So that means it's useful for anyone, literally, and that if sure at first sounds scary, right? Especially from a compliance point of view. That well, obviously, a bunch of criminals are going to use this technology, and the answer is yes. Criminals use technologies, and criminals use good technologies, and that's simply a fact of reality. But this doesn't mean that the technology is bad inherently, or the technology is not useful for good people. I think quite on the contrary, Bitcoin is essential for good people to protect themselves from criminals. We have the opportunity to actually design services and systems that protect users fundamentally and make theft and things like cybercrime substantially more difficult. It's similar to how encryption technology works. Yes, it's a tool that can be used by anyone, but it's also a tool that can protect anyone from outsiders. And imagine an internet without encryption and without hashing, it would simply not be secure, right? We would not have secure accounts or passwords or direct messages, etc. Right? It would be impossible to do business in such a relationship. And so I just would urge people to recognize that Bitcoin is a neutral technology with I think a lot of important and positive ethical aspects considered in the tech itself, and it is one that should be considered for anyone to use. Yeah, and that includes let's say legacy companies and such. Just like nowadays, every company uses the internet. Or every company uses money as a fundamental technology. Different type of monetary system will still be useful, and especially one that has such genius design principles as Bitcoin.
All right. So if we summarize our discussion today, for who is listening, when they would like to walk away with one or two major takeaways, what would it be?
I guess to give a second chance to look at Bitcoin. It's a technology that seemingly nobody understands at first attempt. The first time you look at it looks like a scam. It looks like something that shouldn't exist. But Bitcoin is also technology that changes you and that really helps you to see the world in a different light. And from my experience with living with people who use this technology and who are fascinated about it and who study it, there's a tremendous character change, and I would argue one absolutely for the better. So yeah, this is something really worth analyzing with a neutral and honest mindset, because I think it is at the very least an insanely fascinating topic to think about and to think the consequences to, and just the technology as it works. And a second again it is a great opportunity. There are numerous businesses that need support in the provision of services, of course, in a compliant manner as well. So there's a huge demand for regulatory advice and strategies and such. So a vast business model here that is global, and definitely consider it.
All right, Max, fantastic. That's were all my questions. Perhaps if I forgot to ask you something that you think that will benefit our audience, please go ahead. Maybe you can mention your company, what you do, and because we just spoke on general ideas, not on what you guys do.
Yeah, so I work on CK Snacks, which is a company that is dedicated to building useful systems, useful tools in the Bitcoin space, while of course, being compliant in the sense that we do not want to have sensitive information of our users or be in a power where we have power over our users. So, for example, a key importance for us has always been that we cannot run away with the money of users. And I don't want to be a money warehouse, so to say, where I store coins of someone else, and I could get hacked, I could run away with the money, or my employees could trick me, etc. So the aspect of non-custodiality is always extremely important for us. And yeah, this is why we built Wasabi Wallet, which is a Bitcoin wallet, a software that you can use to generate a new set of private keys and receive Bitcoin and send those Bitcoin. But crucially in such a way that it works without the user sending any sensitive information to our backend servers. Because then as soon as you are sitting on information that is privileged, then that is a huge honeypot, and you don't want to be in a situation where you get hacked and sensitive client information gets leaked. And so, in my opinion, the best risk management strategy for this is to simply not collect the information in the first place. And it's very difficult to build systems that do not rely on oversharing an insane amount of information. Of course, all social media platforms, etc., are the prime example here that simply don't work that well unless you present a lot of information about yourself, not just to outside observers, but especially also to the company who provides the service. And so here we try to build systems that use cryptography and such to have a secure experience that works, that's functional and useful, but primarily where the end user is secure.
All right, fantastic, Max. Thank you for your time today, and I believe that our users will have some thinking about Bitcoin and digital currency. Thanks again, and we will talk again about maybe further interviews on deeper level.
Yeah, that would be fantastic. And thanks again, Boris, for the invitation. I really appreciated this. And yeah, looking forward to getting this all published. Thanks.